Hey, what's up, guys? This is Ty Zen again. Hey, it's getting late over here, and I'm broadcasting from New York City. And I just want to share this with you guys real quick. I was chatting with a bunch of guys today on the Trading View chat box over here in the chat box, and we were discussing the Ethereum price. And if you guys remember back just a few days ago in a previous video that I made about when is the best time to buy Ethereum. The price was around this point right here. It was just on that green candle right there, and I made an analysis stating that this would be a good time to get in. And in case you forgot, guys, the reason why I said that was this, guys. You guys see how this first candle right here, where the crosshairs are on there, this candle right here, when it came down, let me just do this, guys, so that'd be easier. Okay, so this, you see this long right here, guys, that one right there. Let me just magnify this. If you guys look at this, you guys will notice that when the price came down here, it broke this support level right here. So when it broke that support level, keep in mind that all the people that were long from back here, the people that were long from here, and the people that were long from here, they got stopped out. They had their stops right here. They when it came down here, they would get stopped out. Okay. Now, also, so that's one group of people that are selling because their stops are getting triggered right here. Now, it could be a dump. It could be an institutional dump. It could be some big whales selling to squeeze people out. It can even be Poloniex doing or Poloniex purposely running everyone's stops because they can see it. There's no reason why they would not do it because they can collect all the transaction costs, right? So there's absolutely no evidence at all that they would not do it. Okay. Matter of fact, there's more evidence that they would do it, so because it's in their best interest. But I'll talk about that in a separate video. This video, I don't want to get sidetracked. I just want to talk about how this is another good buying opportunity here that I mentioned last time. When is a good buying opportunity? It's in this candle right here. And I said that you can put, if it gets below this, you got to get out of your stops. Okay, you got to get out of your trade because there's enough profit potential to where you can take a wide stop like this. And we're talking about this is a long-term play, guys. And I made a projection that it's going to come up to here to the original 37 millibit that it was at right here, and then put your stop below here. And this is exactly the same right here. Now, in this video, guys, that if you got in back down here on that green candle or on that red candle right there, then I would say that the risk is still the same. But if you miss that move and for whatever reason you were scared or you were nervous to get in, all right, I'm going to share with you guys two more entries that you guys can get in on this. Okay, the first one is you can go ahead and get in right here right now as long as you are still in this green zone here, and I will even adjust this one. So just so you guys know, the last one is still valid as long as you got in here. But now we have to update the entry based up because we have more data on the charts now. And I would say that it's safe to bet that you can get in anywhere in here now at this point. Okay, you can get anywhere in that green area as long as you get in. Like if you watch this video as soon as I upload it and you decide to get in right here, no matter where you get in at, guys, your stop is going to be right there below this low. So that means that if you got in right here and your stop is down here below this low, then if you guys look at it, there is a risk. You're risking 1 unit of risk to make about 11.6 units of gain. And let me pull this down here so you guys can see what I'm talking about. Kind of shrink it down a little bit. If it comes up to all the way up here to the 50 millibit mark. Okay, so now if you decide that you get in right here, you got to put your stop right here. Now the absolute worst case scenario, if you're going to be hard-headed and stubborn, is that you get your stop out down here below this low. You cannot put your stop below this green line, this support level below here, because the entry in which you guys got in is a little bit later now. So the later that you wait to get in, the more risk that you will incur. Okay, so if you get in right here, put your stop below this low. The absolute worst, is that you cannot let it go below this. Okay, so if you let me go below this, you just change your risk reward from 11 units of gain of reward to 1 unit of risk. Now you just change it to 6 unit of reward. Okay, so just keep that in mind, guys. Now, some of you guys that are watching this video right now, you guys are really nervous, you're scared, or whatever for whatever reason is, and you want confirmation. So if you're going to base it on the fact that you want to see confirmation that the price is breaking up above this purple trend line and starting to go back up, then anytime you wait for confirmation in the markets, you are going to lose, you are going to incur more risk and less reward. That is just the basic principles of trading, guys, and there's no get around or no workaround for that. Okay, if you sit around and wait for confirmation, then you have to put up more risk and be willing to accept less reward for accepting for waiting for confirmation. Okay, that's the price that you pay to get confirmation that the price is going in your favor or in the direction that you want. Okay, now if you guys notice, as I was talking, I updated this purple trend line, and once again, guys, I always put my trend line, and there's no right or wrong to this. The key to doing anything in trading is that there's no right or wrong. It's just doing it consistently every time. So I always consistently try to put my trend lines where it hits the most points right here. So there it is right there, guys. So if you wait for confirmation, this is what it's going to look like. You will enter the trade once it breaks the high of that tall green candle and it breaks above this purple down trend line, the intermediate short-term trend line. So you can enter anywhere in that area right there, and this will be your risk right there. So notice what we just did, guys. We just reduced the potential reward from 11 to 1. Now it's down to 4 to 1. So you're going to risk 1 unit of risk here, right? And only look to get 4 units of reward. Okay. Now the absolute worst case scenario is that once you enter there, once it breaks above the purple trend line and the high of this green candle, is that some of you guys may get stubborn and you put your stop loss down here. In that case, you just cut your reward down from 3 to 1. Okay. So 1 unit of risk to 3.3 units of reward, and that's to me, I don't like waiting for confirmation because I always have to incur more risk and take less reward. So because of that, I always prefer to get in on the trade when there's a drop in price like that into my support level. Okay, so hope this helps you guys out, and keep in mind also, guys, we are doing this based on a linear scale. We're not doing this based on a logarithmic scale. Okay, I'll do that in a separate video. Okay, now if you guys put this here, you can see that it's bouncing off of this. Now there are some people in the trading view, guys, and other people in the troll boxes that are asking me, now Ty, why are you not aren't you afraid that because this is a break in the trend line? So several people have emailed me and asked, hey, there's a break in the trend line right here. Doesn't that mean that this is a down trend line? And the answer to that is absolutely not. That does not mean just because you have a break in the trend line, that does not mean that there's that it's a downtrend immediately. Okay. And what I'm looking at is this, guys. I'm going to show you guys this little trick here that I use when I'm trading. Okay. Let me just make this line thinner so that you guys can see what I'm talking about easily. Okay. So if you guys notice this, originally, if you guys follow, look what happened here. When I put my trend line right here originally, notice how it hits this. And if you guys notice how it pokes through. Matter of fact, let me just do this. If you guys notice, originally, when the price came up to here, right? I want you guys to pay attention to the poke, the distance of this poke. Do you see that right there? A little poke through right there, and then it continued on back up, right? And then if you notice this, if you calculate the distance of that poke through the trend line right there, let's just say that we grab this and we magnify this and we grab the ruler and we put it right there. I don't like this. You have to hold down shift. Right there. If you guys measure this poke, it's about right there. It's about a 7% poke through. So I don't have a technical, there's not like a technical name for this, but it's about 7 or 8% where it pokes through the trend line, okay? Now, I want you guys to notice what happens over here. Is as we come over here and we update the trend line as prices is continuing up and we updated this trend line, I want you guys to notice this, right? Notice how when the price is over here, right, and I'm hitting these right there, you guys, notice how right there, I'm hitting all these places, and then I want you guys to notice this little poke through the trend line again. We're going to grab the ruler here, and we're going to measure this, and we'll notice that the poke is again around 6, 7, 8%, somewhere around there. It doesn't have to be perfect, okay, guys? You just gotta remember that it's somewhere around that region, okay? And obviously, as the price continues to go up, the higher the price goes up, every time it pokes through that trend line like that, it's gonna poke even more. So notice how it poked through here and then it came back up, right? So as the price goes higher, the proportion, the percentage of the poke usually, if you guys have been trading something for a while, you guys will notice. See, I have this one here. The poke on this one is about 8%, right? So now, if we update the trend line, again, as the price moves, we update the trend line, okay? So now, that price is moving all the way over here. The trend line, when we update it, it's going to look something like this. Like that right there. Okay. Now remember, guys, it does not have to be perfect. Now notice I touched the corner here, the wick, the tail of that one, the corner of that one, and the tail of that one, corner of that one, and then I touched the tail of this one. The majority touch is what I'm using. The method I'm using is the majority touch method, okay, or the majority hit rule, okay. Now if you guys come over here, you guys see that little poke through right there? If you guys look at it, and look at the percentage in which it pokes through, right? You will notice that the poke through in this particular case is 11%, somewhere around, I would say anywhere between 9 to 11% right there. So it's within a reasonable amount of poke through the trend line, guys. And that's the reason why I did not panic and freak out and try to sell short here, okay? In order for me to sell short here, I would have to wait for this to come down and then retest and then come back down. So after this red candle here, if it starts to come back down, then I would look for a pullback, and then I would get in on a short if I was a short-term trader. Now, I do not recommend going against the trend, guys, because in the long term, if Ethereum is going to succeed, it's on its way up, okay? So I am not a counter trend trader. In other words, I go with the long-term trend with the daily and the weekly trends. I try not to go against it. So when it comes up to here in these areas, I would look to take profits and then just sit on the sideline and go trade something else and then try to get back in for a long. Okay, um, Ethereum, Bitcoin, everything like that. It's a new revolutionary technology. It's on its way up. So I don't like to go against the trend. I'd rather just sit on the sidelines and do nothing until there's an opportunity. Okay. So if you guys, so just a quick summary before I let you guys go. If you guys get in right here, right now, put your stop below this. And an absolute worst case, you got to get out before, excuse me, when it breaks the low of this. And then if you are waiting, if you're a breakout trader, then you would get in after the break of this high right here and the break of this trend line. And a breakout trader is usually a confirmation trader. They're waiting for confirmation that the price is going in their direction before it. It's up to you which one you like to do. There's no right or wrong. Whichever method that you guys choose to enter a trade, make sure it's the same and it's the consistent. And like always, guys, the majority of the time when you enter a trade, you're going to lose money. The other 1/3 of the time, 2/3 of the time, you're probably not going to make money. But that other 1/3 of the time that you do make money on, you have got to let the trade run in your favor so that you can make money and capture the big chunks in the market. And I do not encourage you guys to scalp. The liquidity, there's not enough volume in these cryptocurrency markets to scalp. You're wasting your time scalping. You want to capture these big moves right here. Okay, so that's just my philosophy, guys. That's what, you know, the traders that I work with, that I coach, you know, that's what I encourage them to do. And I would not encourage you guys to do that, to try to scalp the markets and get slaughtered. Okay, and then again, in case you forgot, this blue line is my projection on how the angle in which the price is gonna go. And all I did was I got that from the angle, the trend of these that's shot up previously. If you guys want to learn more about that, then check out my previous video where I explain a little bit more. All right, guys. And oh, I forgot to mention also, guys. I had mentioned on the TradingView chat box that my friend Eric and I in LeonFood.com, we were all going to shop looking for a Lamborghini. And it was funny because we went into the Dallas Lamborghini dealership and they did not want to talk to us. So somebody asked, one of the guys that follow me on TradingView, he asked me to post the pictures. So here's the picture of me and Eric G right here. We were looking at it. The white one behind us, guys, is a convertible right there. That's a Lamborghini Aventador. And this one right here, the white one over here, is a Huracan. And this is the one that, believe it or not, this is I used to teach art a lot for many years, guys, and I'm not really a big fan of orange. And they had a light orange, like a neon orange Lamborghini there, and then they had a bright reddish orange, which is the one that I'm sitting in front of here. This is also a Aventador, and these are like these are magnificently, amazingly awesome looking sports cars, guys. And this is Eric right here from another angle. And so one of the guys asked me to post the pictures and share it with him, you know. So there it is, guys. So some trading analysis plus some Lamborghini shopping pictures right here, guys. The guys were the salespeople were very, very lousy salespeople at the Lamborghini dealership, guys. They saw me and Eric go in there and they did not want to talk to us, you know. So unbeknownst to them, they have no clue, guys, what cryptocurrencies can do for your life. Okay, so right there, guys. Oh, by the way, if you're wondering which one we're deciding on, guys, we still have not decided on it yet. You know, whichever one that we do get, guys, we're gonna call it the Ethereum Lamborghini, or the Ethereum Lambo, or the Auger Lambo, or the Slocket Lambo, whichever one that helps us pay for the Lambo, guys. That's what we're gonna name it. Okay, so hopefully, you know, we can find the right one. LeonFood.com suggested that we also look at the Ferrari 458 Italia. So both of them are nice cars, guys. But enough about that. You know, we'll get more to it whenever we get closer to that date, guys. But just wanted to share this real quick with you guys because one of the guys on some of the guys on TradingView.com asked me to post some of these pictures. So hopefully you guys enjoyed this analysis, guys. And I'll talk to you guys in a future video. Okay. And if you guys like these type of analysis, guys, give me a thumbs up, and then if you guys don't like it, guys, give me a thumbs down so I don't waste time making it. Oh, as I was making this, I just noticed something, guys. I forgot to mention this. Sorry about this. But if you drop this down to a 1 hour chart, guys, here's something that I want to bring up to your attention, guys, so you guys don't panic when you guys see this, okay? Let me hit the reset button right here in the middle. Okay, if you guys notice, right, when the price came down here, there was a big run up in price, and then there was a big drop, and now it's on its way back up, okay? If you are don't let these price swings, guys. Don't let these price swings scare you. Okay. If you know, always stick to your stop losses. If you get stopped out, you can always get back in. Okay. You can always get back in at the same price. If you got in right now and you come down and it stops you out down here, guys. If the price stops you out and then it comes back up to that same level again, you can always jump back in. It doesn't cost you anything to jump back in, guys, but you never want to let this trade go against you by massive amounts, okay? So thanks for watching this video, guys. If you guys like it, subscribe to my channel. And if you have any questions or comments or suggestions, put it in the comment section below. And I'll see you guys in a future video.